ask you, going back to home ownership trends and what's going on in America right now and maybe the world. Um, New York, I agree. New York for sure is the center of the world. They call it the Big Apple, the city that never sleeps. And there are amenities, if you want to call it that, right? There are
Yep.
attractions, there are things. What about what about places like California, where some people would say it's because of taxes, and
Yeah.
people are flooding inwards. People are going to places like Austin and what we call HQ2, right? Wherever a large company is going to possibly make it their new HQ or the second HQ. How much of this is taxes, and how much of this is just the lack of infrastructure?
I think I don't really buy a lot of these. Like, again, these are laugh out loud stories. If you're one of these great founders, great VCs that are billionaires, you already kind of can live wherever you want, and the deal flow will come to you. You can, manage your business sort of remotely. I haven't heard anyone say that they're moving all their staff to all these places. I've heard they personally are moving to Miami. They personally are moving to Texas. As far as I know, they're still cranking out Teslas in, where is that, Fremont, California?
That's right.
They'll have a new plant in Texas. Great. But I mean, I'm not buying. It's like what you were saying before. This too shall pass. I still think there are sort of fundamental benefits to starting your company in the Bay Area, right? Those benefits have not gone anywhere. So if you're in that business, it behooves you, if you have the opportunity, to place yourself in that environment. It might be that you're now creating these new kind of smaller versions of that, but I just don't see the sort of title shift that I keep hearing about in the press. It's almost, to me, it's almost laughable. I'm not buying it.
That's interesting. Um, yeah, I don't have an opinion on it. I still live in California. I'm going to be here. I'm thinking very long
Right?
term. I'm
Yeah.
a buyer right now. I'm looking to maybe add to my portfolio, and I think it's a good time to be buying. But then again, there are cities like San Francisco which are heavily reliant on tech, and if there is a future where
Yep.
remote work is in place, then this place will be disproportionately affected. Now,
Perhaps.
we've noticed a phenomena too, where it's always assumed that house prices are sometimes going to be a function of rents. Why is it in certain markets rents have dropped off a cliff, yet house prices haven't gone down as much? And I'm talking about the very same places we're talking about, the New Yorks, the San Franciscos. Do you have
Hmm.
any sort of insights on that, especially from where you sit
Yeah.
in this
I mean,
industry?
yes, I think part of it is that there was a moratorium on eviction for mortgages. So a lot of what you would see, for instance, in the 2008 financial crisis, where there were all these home loans that were immediately underwater because the homes were priced mispriced, and then the mortgage banks and servicers were sort of actively pushing these people out of the homes to try to fix their balance sheets. That didn't happen this time. So with this crisis, right away there was a federal lock on if you could push somebody out of a home they own.
So the government,
Um,
the
yep,
government basically came in and saved the day. The Fed saved the day in the
yep,
stock market, but they also saved the day in the real estate market. And
that's right.
a lot of people, there's a ton of money sitting there, dry powder in private equity, waiting to snap up, waiting for a moment
Yeah.
like this. And actually, when that moment came, people didn't strike. People were so afraid at how quickly things dropped. Hell,
Yeah.
Bitcoin dropped, gold
Hmm.
dropped, everything dropped, stocks dropped, right? And that
Yeah.
was the time, and I closed on a deal right in the midst of it, and I managed to get some discounts too because of the uncertainty, right? And also at that point, we're talking February, March, banks and mortgages were also on pause for a moment. They were like, hold on, we need to figure
Sure.
out what's going on. But it was a very
Right.
short window. It was a few weeks at most.
Mm,
But you're saying the Fed's come in basically and has put a moratorium on mortgages basically, and
yes.
that's basically weathered the storm, allowed the U.S. to weather the storm basically for real estate.
That's right. I think for the rental market is a little bit different,
Yeah.
right? I think some of the sort of financing of some of these buildings are somewhat different. I know, like in Chicago, some of these are like really large, luxurious high rises, right? And they've built these buildings with a certain financial model around their vacancy, the rate that they have to fill it, right? So they're willing to say, okay, we'll give you a break on the first 6 months rent. we'll give you free parking for like they're figuring they're doing this math and basically saying, okay, that's my CAC, and my LTV is I have this person locked into this building for 18 months, 24 months, and they don't typically move, so maybe it's a little bit longer, right? And so I think the equation for the rental side is a little bit different, which is why you're seeing a lot more sort of deals on the rental side.
Yeah.
For the
And
mortgages, it's
these
like,
concessions basically are seen as a CAC, as you said, a cost of customer acquisition,
yeah,
and so that
yeah,
will drop the price. I've done it through I own some buildings throughout the US too, and we've been giving concession. We've been giving step up in rents over time. So the rents are depressed and low, but they will step up over time. And we just
yeah.
simply see it as, look, the stabilized net operating income in Q4 next year will be great, actually far higher than, where we would be at a moment in time. But for the
Mm.
next 3 months, it's going to be pain, but it's okay. It's just a CAC, you know?
Skek. Yeah, that's it's cost of doing business, right? And this is real estate, so that's one of the reasons I love real estate. Like, and you're directly invested in it. These things pay off over long periods of time,
Yeah,
and
you have
also
to
the tax
underwrite for
profile.
years and years ahead.
Yes, yes. And by the way, to your earlier point, we didn't really cover this. This new tax regime around the write-offs for your mortgage and your taxes and how that affected the coasts disproportionately. With a new executive administration, there's a chance that gets reversed, and then there's even more macro flow back to those coastal cities. So that's another thing that people don't talk about a lot, but could certainly happen in the next, I don't know, 6 to 12 months.
Yeah. Wow, exciting times. Lots of big shifts happening in the industry. Um, so, any questions you have for me?
Yeah, would love to first of all hear just more about your journey. I know that you've had a lot of success as a startup founder and now moving on to as an investor. Would love to hear a little bit more about that journey. I love hearing the war stories and the things that popped out from that.
Yeah. Well, look, being an entrepreneur is full of this up and down roller coaster. One day you think you're going to go bankrupt, the next day you think you're going to buy Google or Facebook. It's literally the
Yeah.
level of extremes there are. And when you're an entrepreneur, you have all your net worth tied up in one single stock, and it's terrifying. And I swore to myself I'm going to diversify.
Mm.
And like you, I wanted to buy real estate. I just didn't have the money. I was extremely illiquid. Everything tied up in my startup, right? Um, Once that sale came, and it was a great sale at a good price, um, I decided to set up a family office and buy real estate. And this is what every tech guy does that makes money. Goes out and buys real estate, makes some mistakes, and then pivots and learns a little bit more. But wanted to go and buy real estate and also diversify, the whole portfolio. I think I set out initially to have one third fixed income, one third stocks and bonds, and one third fixed income, one third stocks, and the rest of it one third alternatives. And within alternatives, real estate would be the largest category. I'd say 20% real estate, 10% private equity and stocks, and it's shifted a little bit. You can't help it when the stock markets are crazy the way they have been. You end up owning a lot more stock. But
Yeah.
I am pro stocks long term, but I think real estate's the best opportunity ever. It is the best thing to own, and it's so exciting as an entrepreneur when you go without a salary for so many years, and now there's this asset class that pays you income. Right?
Yeah.
It's
Yeah.
crazy. When I was an entrepreneur and I saw other people in real estate make money, I'd be so envious. And frankly, these guys used no tech. And
Yeah.
it literally was a game of hustle. It was like, okay, let me hustle, let me go find an off-market deal. And the IRRs most private equity funds generated were very high since, the 2000 and 14 onwards, or, wherever you came
Sure.
in, even 2008 onwards, 20, 30, 40% IRRs aren't unheard of year over year.
Mhm.
And there I sat as an entrepreneur watching a lot of people make money in real estate, and I had this envy. I was like, damn it, I'm working so hard and I don't have that steady paycheck, and we don't know how my company's going to do ultimately. You've got to be nuts
Yep.
to run a company. Paid off, obviously. The returns are exponentially higher in startups, but the risks are also very high too.
Mhm.
But yeah, that's sort of how I've made my journey. It's been challenging because there's an itch, right? When you're an entrepreneur, there's an itch. Now, I'll tell you, before I did my startup, and we rewind back to when I was in college, I thought I wanted to become a VC. And
Hmm.
I met with a mentor of mine at DFJ, which is this big, venture fund. And Tim Draper ended up investing in my company, by the way. He was the founder of DFJ. Like,
Sure.
I've got some interesting YouTube videos with him, who's, a live video where he was actually giving me advice on how to become an investor. It's really good. I recommend people watch it.
That's cool.
And my mentor said to me, you're going to be on the other side of the table. You're going to be hearing startups pitch to you. And you're going to go, you're an entrepreneur at heart, I can tell. You're not going to be able to control it. You're going to be depressed. You're going to want to be on their team. You're going to want to be the entrepreneur, right? Some people are cut out to be entrepreneurs. Some people are, cut out to be investors. And secondly, if you're going to be an investor, how are entrepreneurs going to take you seriously? It's once you've done something. If you've got operational experience or you're a former founder. So I did want to be a VC, but in my heart I was an entrepreneur. So, having done all these companies, now I'm a VC and I can see it like, wow, I can add a lot more value. And look, there is a little bit of, I'll tell you, when you're a successful entrepreneur, it's crazy how VCs court you and approach you. And look, there's an arrogance that builds. I mean, Mark Zuckerberg showed up to a VC meeting once in his pajamas, literally, right?
Right.
I found when I was trying to raise my first capital for my seed round, I was begging people. Literally, if you see my emails, I was just horrified now when I look back at some of the emails I sent to VCs, how I'm like so desperate. It just reeks of, that I have no options. And I'm like, I would love to work with you. Your venture fund is such a good fit for what I'm doing. Horror now that I think I sent those messages, right? And then eventually, once we were profitable and we were breaking through revenue, 50 million, 100 million, 200 million run rate, just VCs were contacting me nonstop. And eventually I was like, I don't want to meet these VCs anymore. It's a distraction for me. I'll meet a VC who was an operator. I'll meet a VC who was a former founder because they have something to teach me. Otherwise, it's just the same old, right? And that's something I'm seeing now, where the experiences I had as a founder do translate well into being an investor. But I still get that damn itch, and I like it. Now, the other thing is when I started Vungle, it was in the marketing technology industry. And I looked at about 3 or 4 areas I identified. And like you, I created these little business plans. Really, it was just notes on my phone, okay, with some structure around it. And we ended up choosing the mobile video advertising industry for apps, quite niche. Now, there were like 3 or 4 other areas I could have chosen. And I found out as time passed, if I had done another company in one of those other areas, they would have been successful too. In fact, it's not like there'll be one company that's successful. When you have a big industry, the 3 or 4 companies in the industry become successful. I kid you not. The company I started wasn't the number 1 company in the space. It was like the number 3 company in the space in terms of revenue, right? And I'm not talking about Google, Facebook. I'm talking about startups. Every single one of these 3, 4 companies became a unicorn in my space.
Wow.
And I also used to think, what if I'd done a company in one of those other spaces? Well, 3 or 4 companies in those spaces became unicorns too. Now, here's the crazy thing about PropTech. I did the same exercise after selling my company. I thought about starting another PropTech startup, right? And when I looked at the landscape, there were like 20 areas. There weren't 1, 2, or 3. There were 20 damn areas. You could start a company in today in PropTech, and I guarantee you there'll be 3 or 4, 5, 10 unicorns in each category. In my case, when I built a company in the mobile app industry, apps were very emerging. It was very hard to prove TAM and market size. And the dynamics are different there than they are in PropTech for sure. But I'll tell you what, the market sure as hell didn't have the word trillion in it. The market was measured in the billions of dollars. Maybe a $5 billion market, TAM total, maybe a $2 billion market TAM, right? PropTech and real estate, we're talking the world's largest asset class here.
That's right.
And I feel the best way for me to play it was to become an investor and invest in those different companies in different sectors. And I saw my early investors made like a 200x plus return. Okay. And that's on the outliers of returns, but hell, if you're in Airbnb or something, the returns are even crazier, thousands and thousands of X. If you can invest in those leading companies in PropTech in different sectors, there's a ton of money to make as an investor. And that to me was one reason. The other reason is I own a lot of real estate and I'm terrified. I'm terrified that so much of my net worth is tied up and concentrated in real estate. Where's all the tech? How do I make sure that there is enough tech in my real estate portfolio to protect the downside and boost returns? So, there's sort of a big ramble waffle way of how I got here and why I'm doing what I'm doing now as a VC in prop
No,
tech.
it's really cool. I think that what you've hit on something that's important, which is that, first of all, I don't think a lot of real estate professionals have the background, the aptitude, or the interest in putting any tech into their operations. I think that immediately gives you sort of an edge
And
because you
Carl,
have
by the
that
way,
background.
why would they? Honestly, if you're in real estate, you just honestly don't fix it if it ain't broken is what I hear all the time.
Yes.
Honestly, you buy
Yeah,
something, you hold it, you've got to be incompetent to make a loss. It's been
sure.
easy money. That's what I'm seeing still, and that's a challenge for entrepreneurs today in prop tech.
Hmm.
That
Hmm.
in the real estate owners are conditioned. I'll tell you, the only folks right now who are panicking, who are adopting tech, are coming from sectors that have been destroyed, like
Mm,
hospitality, the hotel
sure.
industry. And if that wasn't enough, not only are people not staying in hotels right now, Airbnb is sucking the oxygen out of the room.
Yeah, no,
And
that's right.
the percentage of revenue that's going to go to platforms like Airbnb versus traditional hotels, they're just converging now. Eventually Airbnb and the hotels will be like Airbnb will be bigger than that industry. Then the other industry would be the travel industry and what else? Let's say office industry too.
Well, I think it's funny. Like when we were very early stages with Abode, we kind of figured this part out. This idea of like, well, if it's not broke, don't fix it. Because we were doing something where we were working more with agents and almost selling to agents. And right away, I knew this is not the market I want to be in. I do not want to be selling to agents because for them, they're like, I'm earning 3%. I just sold $1 million home. I do that a few times a year. I'm doing pretty well, right? Why do I need your software again? And so I said, all right, that's not our track. We're not messing with that. And I think that there is opportunity there, but it's not the path for us. So that's something. And I think Airbnb is going to end up being, I mean, I remember listening to the CEO talk about his plan that he'd put on hold, and it was around like this airline portal they'd built that flowed into the, so that, it would really soup to nuts. They're going to get you for and they own a hotel tonight. They have hotels, they have the Airbnb host, and they had a whole airline sort of play. And I was like, oh my goodness, that's valuable, right? That's interesting. So yeah, I think Airbnb is going to continue to out execute.
There's real vision there for sure. So you decided to focus on a segment of the market with Abode, and it's not the thing that comes to mind normally, which is there's the 3% commission that goes to your everyday real estate agent, who a
Mhm.
consumer would use. How are you guys approaching it? How do you decide to focus on your niche?
Yeah, so we're very intently focused on a couple different customers. One is the DIY consumer, and so this is somebody who wants to sell their home but does not want to pay the traditional kind of 3% on each side commission. That's our bread and butter. That's the vast majority. We also partner. We have channel partners, and so some of these are large institutions that list not just one home at a time, but they might list 50 homes at a time, right? And this is a growing and interesting market. And they specifically don't want to pay the fees because it goes to their IRR. These are institutions that are making money on their
Huh.
homes. And then there's another group of sort of, they're almost like, they're other websites. I don't want to name the ones like that we're working with right now, but they're big websites that have consumers that also need help listing flat fee with us, right? And so those are channel partners that send flow to us as well. Those are kind of the three main areas that we work with. And we save people on average over $10,000 per transaction.
And you figure this was an unaddressed segment of the market, and
It's not so much. So it's not so much as unaddressed. It's been addressed before, but it is an underserved,
underserved.
fragmented market with a lot of sort of crappy solutions in it. Not very. This is not where people, got excited to build. If you Airbnb is another example. Go look at that experience. It's a really beautiful experience, right? It's very sort of like Valley, Bay Area kind of design, right? And then I know they went to RISD and everything else, but whatever. That is not the group of the talent that went after the DIY real estate space. It's very kind of spammy looking, very kind of junky. That's not has not attracted. So we looked at that and we said, "Ooh, that's interesting," because we know how to build elegant tech, right? And so it's been a historically underserved, fragmented market.
That must have been interesting as you do your competitive research. You sort of see what's out there, and it just reminds you and makes you laugh in a way. Like, wow, this is what people are dealing with. This
Yeah.
is the opportunity to address. So it sounds like to me, some of the things that stick out to me is like you've got quite a focus on elegancy, a good UX, a good UI, and a good experience overall. What did you do on the engineering side, by the way? And has any of that helped you? You know, were there any other experiences in your career, including any engineering experience you had that you brought into the startup?
Yeah. It was kind of funny. This is a weird, kind of non-traditional story, I think, in a lot of ways. So I'm a third generation auto worker. My grandfather worked in the auto industry. We're from Detroit, so this is kind of like in our bones, is what we do. And my dad was a quality engineer. And so if you go back to sort of the 70s and 80s when Japan was really kicking our butts, there was this huge movement in Detroit to train all the engineers on, like lean manufacturing, to put it in simple terms. And so I grew up like in my house with like lean manufacturing, like exams and study forms and all this stuff, because that's how General Motors used to train. General Motors had their own university, and they would train up their staff, right? And so I grew up around lean stuff, and then right my first year of undergrad, I worked as a lean manufacturing engineer for General Motors in Delphi. And so my background's all in sort of like workflow process, lean manufacturing. And then fast forward to, Eric Ries and the Lean Startup. When that book came out, I was like, oh, it was it spoke to me because it was all the basics that I had learned as like a 19-year-old on the plant floor, right? And so all that Lean Startup stuff is stuff that we use every day in building Abode, and what I've built with other companies as well. So different from it's not so much the code. My co-founder is our CTO, and he does everything for the software development. But if you think about everything from the iteration of the actual company, the operations, that's me.
It's fascinating when you stumble into an industry and you look back on your own background and you realize, wow, the dots connect. I feel like this is my calling. I was built to do this. It's like all those disparate data points that seemed like they had no relevance.
Yeah.
Right?
It's bizarre when it happens, actually. It's like, whoa, that was weird that I ended up right in this seat when, I would have never known that was going to happen when I got started.
I definitely believe that everything that people go through happens for a reason. It's on you to look back and try to correlate and try to use the experiences. Otherwise, it's all a waste. For me, I used to design websites when I was a teenager growing up, and I used to put ads on a bunch of websites. And I was very quickly able to understand when the mobile industry was growing, oh, well, I used to build ads that used to go on websites. Why not put ads on mobile phones? Right? And I was able to draw on that experience. And then the other thing I was able to do is to realize these mobile phones and websites are like real estate. They're just digital real estate.
Yeah.
So I can now draw on that experience and bring it to the real estate sector. And this is where true creativity happens, when you're able to take your unique experiences as a human being. It could be anywhere, right?
Yeah.
It could be any education you've had, any job you've had. It could be on the assembly line. It could be in a banking. It could be, in another tech company or whatever, right? But use those experiences. Otherwise, why bother? Why bother?
That's right. I mean, what each person brings with their unique individuality to the challenge that's what makes the difference, right? And sometimes those differences are small, it's like inches, but they turn into miles.
Absolutely, Carl. I think that's a great note to end the podcast on. I want to thank you for coming on the show. Any final words for our listeners? Anything else you want to share?
No. So if anyone is selling a home, buying a home, check us out. We'll save you a lot of money and make you have a really nice, easy experience.
And how do they check you out? What's the website?
Yeah, so you can come to abodehq.com, and we also own usrealty.com. So if you're outside of Chicago, usrealty.com is the way to go, because that's where our national license is.
Great. It's a great domain name there.
Not bad.
Yeah. All right, then. Thank you, Carl.